Good afternoon, and welcome to Danske Bank's Q4 2025 pre-close call. My name is Claus Ingar Jensen, and I am Head of Investor Relations. With me, I have Olav Jørgensen and Nicolai Tvernø from our IR team. Please note that this call is being recorded for compliance reasons, and the script used for this call will be published on the Investor Relations website after the call. Given that we conduct this call via Teams, please be aware that if you want to ask questions, you must log on via the Teams app or your browser. If you participate via a telephone line, the IR team will be available for questions after the call. In today's call, I will highlight relevant public data and macroeconomic trends in our markets. I will go through the relevant P&L lines and comment on capital at the end. Afterwards, we will open for a Q&A session. For the sake of good order, I would also like to highlight the following. I will only answer questions related to already disclosed information, as well as publicly available information, unless otherwise noted. In connection with this, I wish to highlight that development in specific indices may not always have the same effect on our performance. Before going through the income lines, I would like to start with a brief comment on the most recent macroeconomic development based on our Nordic Outlook published in early December. In the euro area, we have seen growth prospects through 2025 being better than expected despite the tariff announcements and geopolitical uncertainty. In the Nordics, we expect the decent growth trajectory to improve further in 2026, for example, driven by rising real incomes and investments. Looking at the Danish economy, Q4 reflected another solid economic backdrop with sustained low unemployment and growing real wages. Consumer confidence remains low, however, which on one hand is putting a damper on the propensity to spend, but on the other hand leaves a potential for improved growth if and when households start increasing their consumption. Overall growth is expected to pick up in 2026, driven by exports and investments, with still very solid employment rates and government fiscal spending. Now let's have a look at the net interest income. Please note that as part of the ordinary tax assessment for 2024 concluded in conjunction with SKAT, the Danish tax authorities, we expect a non-recurring benefit to the NII line of around 0.2 billion booked in Q4. Let me now briefly highlight the relevant changes to central bank policy rates. Given the last ECB cut was in June, you should not expect any direct quarterly impact in Q4. We expect the ECB to keep the policy rate unchanged at 2% in 2026. In Sweden, Riksbanken lowered their policy rate by 25 basis points to 1.75% in September, and now it is also expected that Riksbanken will maintain unchanged rates until the end of 2026. Norges Bank reduced the policy rate from 4.25% to 4% in September, with a cut in 2026 widely expected. Regarding recent volume developments, we refer to public sector statistics released on the 6th of January this year. In terms of lending volumes, we note that overall credit demand has been more or less stable during Q4. Please note that Q4 has the same number of interest days as Q3. The day effect is estimated to be around 65 to 17 million. As always, please be mindful of currency fluctuations in the market where we operate. During Q4, Swedish krona have appreciated around 2% against the Danish krona, while Norwegian krona depreciated around 1%, and pound sterling ended Q4 roughly flat versus the Danish krona. Looking at funding costs, we note that CIBOR has roughly been flat, while STIBOR and NIBOR have decreased during the quarter. STIBOR lowered by around 19 basis points, and NIBOR lowered by around 10 basis points, all based on quarterly averages. In terms of wholesale funding, we have issued around 90 billion somewhat above our full-year funding plan of 60 to 80 billion of debt issuance across instruments, an indication of our growing balance sheet and credit demand, as well as some pre-funding of our 2026 funding plan. Please visit danskebank.com, the debt section, for further details on terms and pricing of our issuance. Moreover, we reiterate the interest rate sensitivity given at the Q3 interim report release, which is approximately 650 million negative per 25 basis points cut across all currencies. Correspondingly, per 25 basis points hike, we estimate an effect of around 450 million. In addition, we estimate a year 2 and year 3 up and down effect of 300 and 100 million respectively related to our structural hedge. Please note that by far most of our sensitivity relates to DKK and Euro in that order. And in respect to fee income, we will start by noting that the development is always subject to conditions in the financial markets, refinancing activity, and the general activity level among our customers. Throughout the year, we have benefited from the diversification of our fee income, including our everyday banking fees, which continues to benefit from healthy corporate activity. With respect to investment fees, we note that this line is naturally impacted by the development in asset under management, as well as the investment activity among our customers. Note the seasonality concerning performance fees in asset management, which are booked in Q4. For reference, we booked performance fees of 0.7 billion in Q4 2024, and on average 0.5 billion for the last 2 years. In respect to fees generated from financing, we expect refinancing fees in Q4 to be slightly higher than Q3. As a reference, in Q4 of 2024, it amounted to around 135 million. Finally, concerning fee income from capital markets activity, our LC&I franchise has recently successfully won leading mandates on landmark transactions. However, we note that primary markets activity in the fourth quarter broadly has been relatively subdued, especially concerning ECM and M&A. Now turning our focus to trading income. Please note that customer-driven trading income, primarily in LC&I, is expected to be impacted by usual customer activity in Q4, which tend to be lower towards the end of the year. And then our income from insurance activities, Danica's results are always subject to development in the financial markets and in the health and accident business. Following an FSA order received on the 1st of September 2025 related to claim patterns for long-term illness in the health and accident sector, we have strengthened our model calibration for the past years. This will lead to 2 effects. Firstly, a net negative P&L effect of around 200 million, 0.2 billion in Q4, resulting in our full-year income expectations being below our guidance of 1.4 to 1.6 billion for normalized net insurance income. Secondly, related to a correction of past year's model calibration, is a capital impact on the group CET1 ratio of around -10 basis points. For other income, we reconfirm the lower run rate for other income seen in previous quarters in 2025 due to lower contribution from asset finance activities. Please be reminded that in Q4 of 2024, the sale of the personal customers business in Norway to Nordea included the management of 15 Danske Invest or Horizon funds, which had a positive effect on other income of 0.2 billion. And then moving to costs. Please be mindful of the expected higher seasonal cost occurring in the fourth quarter and our continued investment spend. For the full year, we thus expect total cost to be just shy of 26 billion. And then impairments and credit quality, we have no specific comments in respect to the fourth quarter, as we reiterate full year loan impairment guidance of no more than 600 million. We do not have any comments with respect to tax. And in respect to one-offs, the around 200 million net impact related to Danske's model provision will be booked as a one-off in Q4. Outside this effect, we do not expect any other one-off items for Q4 of 2025. And this concludes my comments on P&L, and so let's move to capital. Regarding capital, the EU Conglomerate Directive has been adopted into Danish law and will apply from the 1st of January 2026. As such, we expect the communicated temporary CET1 reduction of around 40 basis points evidenced in Q3 still to be reflected in the reported end-of-quarter numbers in Q4, such that the temporary impact will continue to be reflected until our Q1 release. However, fully phased-in capital ratios will be available in our Q4 financial disclosure, reflecting the reversal of the previously guided 40 basis points. And as I mentioned earlier, the incremental health and accident model provision in Danske are expected to have an additional -10 basis point impact on the group's Q4 CET1 ratio. In terms of risk exposure amount, you should also be mindful around the standard procedure in Q4 of calibrating operational risk REA, which will likely lead to an impact from this year's net profit level. For reference, the REA increase observed in Q4 of 2024 and Q4 of 2023 was 4 and 6 billion respectively. Furthermore, the 3-year average net profit used for the operational risk calibration is, with our current guidance, expected to be higher than the preceding periods. Besides that, we do not have any specific comments on REA, other than noting that market risk remains subject to volatility in the financial markets, and that our growing lending volumes, all else equal, would result in higher credit risk REA. Finally, in respect to our CET1 ratio and similar to the same period of last year, the intended additional distribution outside our already accrued 60% related to the ordinary dividend policy will be fully deducted in our Q4 ratios. For reference, the additional deduction we saw in Q4 of 2024 was around 120 basis points. This concludes our initial comments in this pre-close call. Before we move to the Q&A session, I would like to highlight that we begin our silent period on the 15th of January. We will shortly start to collect consensus estimates with a contribution deadline on Thursday the 15th. Please note that we publish our annual report on the 5th of February at 7:30 a.m. CET, and that the Q4 conference call for investors and analysts will take place at 8:30 a.m. We are now ready for the Q&A session. If you wish to ask a question, please use the raise your hand function. Thank you. I can see we have a question from Sophie. Hi, Sophie, please go on.
Yeah, hi. Thanks a lot, Claus, for the comments, and Happy New Year. So, just 3 quick questions. So, we saw some news around the CRE risk rates in Denmark. As far as I can see, there was no kind of decision made by the government. Is that correct? Or, and if so, do you expect a decision to come anytime soon?
Yeah, you are right. Your observation is correct. There are no decisions made for the time being. The proposal is still on the table of the minister. And we do not know exactly when we will have some clarity on what will happen here.
Okay, that's very clear. And then just a clarification. the minus 40 basis points on capital, so that's unchanged compared to the Q3 2025, right?
Yes, that is correct.
Yeah.
As the conglomerate directive takes effect on the 1st of January, and as our full year result reflects, the status on the last day in the year, it will not be adjusted until you will see our Q1 disclosure material. So that is correct.
And then a question: the U.S. corporate probation ended now in December. Is that in any way going to have an impact on your Q4 numbers?
Sorry, what kind of provisions are you talking about?
The U.S. corporate probation after the AML
Okay.
ended in December. Is that going to have any impact on your numbers?
No. Sorry, I misheard. I thought you said provisions, but you said probation. No, there will be no effect from the end of the probation period.
Okay, and then last question. We've seen some headlines in the Danish press around kind of potential fee gaps. Anything you can comment here?
Sorry, can you repeat some comments around Danish what?
I think it was your finance minister that he was saying that banks are overcharging on fees. I think last week there was also an article in the local press around the fees and banks overcharging SMEs. I guess you have elections in 2026. So do you see any pressure to deliver the fees, or are there any discussions in the background around kind of that could have an impact on your fee income line in 2026?
I think the comments actually started on the annual meeting for Danish banks during the last part of 2025, and I think it seems to be the perception among politicians, at least among some politicians, that there isn't enough competition, and that's why they are discussing whether there should be any political initiatives on banks' fee income for certain services. But this is some initial discussions, and as you rightly mentioned, it's election year. It will take quite a while before this eventually is something that is coming through and will impact the banks. So there is nothing new here, and I would not expect. Well, it's difficult to predict around the future, but as I said, and you said, it's election year. So the question is whether there will be anything to be discussed in this session in the parliament before the election. I doubt it, but let's see.
Okay, that's very clear. Thank you.
Thank you, Sophie. And Namita? Hi, Namita.
Hi, Klaus. Just a quick one on the net interest income. Why are you pre-funding the 2026 wholesale funding?
Well, I would say it's not unusual that we do some pre-funding. We would like to take, if there are any opportunities we can look into from different sectors, different currencies, different markets, and that's something we have done before. So it's just standard procedure that from time to time we do pre-fund if there are any good opportunities for us. So I don't think you should put anything more into that.
Okay, makes sense. Thank you.
You're welcome. Do you have any more questions? Doesn't seem to be the case. Thank you very much for your participation. And as I said previously, more than welcome to contact IR if you have any additional questions. So I wish you a nice afternoon. Goodbye.